Gus Schmidt back with a new trading video. So today I'm back on the pocket option platform and I'm going to be trading currency pairs, OTC currency pairs on the platform here. So I have all my currency pairs that I'm interested in above the chart here. Great British Pound, Aussie Dollar, New Zealand Dollar, Japanese Yen, Aussie Dollar, Canadian Dollar, and so forth. If you click on the icon here, the currencies, I have them checked off when I want them up here in the row here. So I have them all checked off. Okay. And I'm going to be utilizing two indicators. And if I click on my indicator icon, the two indicators are the Parabolic SAR, also known as the Parabolic Stop and Reverse, and the Williams percent R, which is also known as the Williams percent range indicator here. And if I click on the pencil icon for my Parabolic SAR indicator settings, I have the acceleration set to 0.03, maximum acceleration set to 0.3. And in my style settings, I have the line width set to 2 pixels. Okay, we go ahead and save that. And for the Williams percent range indicator here, I have the period set to 10. And in the style settings, I've also increased the line width of all three lines to 2 pixels as well. Okay. And for my candlestick chart, I have the candle set to 1 minute regular Japanese candles here. And for the trade time, I have it set to 2 minutes. So I'll be taking 2-minute trades while looking at these 1 minute candles. Okay. So what I'm going to do now is I'm going to pause the video and look for some setups. Okay, so I'm on the US dollar Japanese yen currency pair, and I just took a buy trade here. And the reason why I took the buy trade is, first of all, there is a bullish price action. If we look at the price action of the currency here, it's showing a bullish trend to the upside from bottom left to top right. Secondly, the the Williams percent R line has crossed above the green 20 line in an upward direction here. And thirdly, the parabolic SAR dots have begun to print below the candles here. So all three confirmations have been met, which suggests a continued bullish movement to the upside over the next 2 minutes. So let's monitor this trade and wait for the expiration. We want to trade with the trend. The key is to trade with the price action of the currency pair. So let's wait for the expiration. In addition to that, I waited for this particular candle to close above this red wick here. And once this candle closed above the wick, that suggested to me also a bullish breakout to the upside as well. I didn't take the trade. Okay, so we won that trade, but I didn't take the trade until I was sure that this candle broke above this red wick here, the top red wick, which represents a level of resistance. The price may have shot back down here, but like I said, if you notice here, this candle broke above this wick. Closed above this wick, and that's why I took the trade. All right, so let's pause the video and look for the next setup. Okay, so I'm on the US dollar, Canadian dollar, and I just took a buy trade here. And the reason why I took the buy trade is, first of all, we're seeing a general price action, bullish price action here in the price of the currency pair from bottom left to top right. Secondly, the Williams percent R line has crossed over the green 20 line in an upward direction. Thirdly, the parabolic SAR dots continue to print below the candles here. So all these three confirmations suggest a continued bullish movement to the upside in the price of US dollar, Canadian dollar over the next couple of minutes, 2 minutes. So let's monitor this trade and wait for the expiration. In addition, uh, this candle here broke above this red wick here, which initially served as a level of resistance. So once this candle broke and closed above this wick here, that's another signal that there's going to be a continued bullish movement to the upside here. So we have the Williams percent R holding steady above the 20 line, the green 20 line, parabolic SAR dots printing below the candles. And yes, we won that trade. All right. So I'm going to pause the video and look for the next setup. Okay, so I'm on the Great British Pound, Japanese Yen currency pair, and I just took a buy trade here. Okay, now the reason why I took the buy trade is, first of all, uh, we're seeing a price action, a bullish price action in the price of the currency here from bottom left to top right, overall bullish momentum here. Second of all, the Williams percent R line just crossed over the green 20 line in an upward direction. Third of all, the parabolic SAR dots here have begun to print below the candles. And finally, this candle here broke above this candle wick here. This candle actually closed above the wick here. Uh, so this suggests, all these confluences suggest a continued bullish momentum to the upside in the price of Great British Pound, Japanese Yen. So let's watch this trade and wait for the expiry. Okay, the price is continuing to push upward. Very important that if you see this wick here, that represents a level of resistance, these two wicks. So we want to make sure that the candle, one of the candles breaks above the wick here. And great, we won that trade. Okay, this is really important that the candle breaks above the wick here. It's one of our confirmations here that because if it doesn't, then there's a potential that the price will break to the downside. But once we see the wick, the candle close above the wick, then it's a good sign. All right, so let me pause the video and look for the next setup. I'm on the US dollar currency pair, Euro USD, and I just took a buy trade here. And the reason why I took the buy trade is, if you see here, there's a nice bullish price action occurring in the price of the currency pair here from bottom left to top right. Secondly, the Williams percent R line has crossed over the green 20 line in an upward direction. And thirdly, our parabolic SAR dots continue to print below the candles here. Uh, Also, you want to make sure, if you see this red wick here, This represents a previous level of resistance here. So I wanted to make sure that this candle actually closed above the top edge, the top end of the wick here. And those confirmations, all those confirmations suggest a continued bullish momentum to the upside in the price of Euro USD here. And this is exactly what's happening here. So combination of the price action here, the bullish price action, the candle breaking above this level of and closing above this level of resistance, Williams percent R line crossing over the 20 line, and the candle, the parabolic dots printing below the candles here all suggest a bullish price action from, the entry point that I took here. And great, so we won that trade. All right, so let me pause the video and look for one last setup. Okay, so I'm on the Great British Pound US dollar, and I just took a sell trade or a put trade here. And the reason why I took the trade is, first of all, we're seeing a bearish price action, a price action to the bearish side here from top left to bottom right in the price of the currency pair here. Second of all, the Williams percent R line crossed below the 80 line in a downward direction here. Third, the parabolic SAR dots have begun to print above the candles here. And lastly, this previous red candle closed below this previous level of support here. You want to wait for the price to close below the level of support here, because if it doesn't, it may push the price back up in the opposite direction to the direction that you took the trade in. So you want to wait for the candle to make sure the candle, which I did, this particular candle here closed below the previous level of support here. And so all these confirmations suggest a bearish a bearish movement, a bearish momentum to the downside in the price of the currency here. So let's monitor this trade. We want to trade with the trend. We're trading with the trend, which is downward here, which is bearish. So let's wait for the expiration here. Okay, great. So we won that trade. All right. So we had a pretty good session today. So if you like the video, please give it a thumbs up. Give me any comments you have about the strategy. Subscribe to my channel if you're interested in getting updates on various trading strategies as I put them out. I have a link to the platform, to Pocket Option, in the video comments and or the channel description. Also, I wanted to take note that I'm only risking about 2% of my balance, between 1 and 2% of my balance here. And that's part of good money management. You don't want to take big trades, because big trades can lead to big losses. So the whole idea is that you win more than you lose. And that way, when you risk, a certain percentage, uh, you're going to consistently grow your account. Okay, so I wanted everybody to make note of that. So thank you for watching, and I'll see you in the next video. Gus Schmidt. Thank you for watching.